Hello everyone. Today we are going to discuss a strategy called engulfing candlestick strategy, which is usually very good to trade, especially on a higher time frames. So here we are speaking about either 4-hour chart, daily chart, or a weekly chart. Why is that? That's mainly because here we are talking about a strategy that is extremely powerful when it comes to envisaging end of the trend and trend reversal. We have prepared a couple of charts here to show you and to demonstrate what are pros and cons when you actually take into consideration this strategy and try to incorporate it in your daily trading plan. This is one of the more basic strategies because you only need a Japanese candlestick system that's available on all platforms and that vast majority of traders use every day in trading. As every strategy, we are discussing two different versions, a bullish and a bearish one. So here we have an example of the bullish engulfing pattern. And as it's implied in the name, this pattern suggests that the bulls are taking control from the bulls are taking control from the bears, and the first sign that you have to look is the trend. So if we have a downtrend or a declining trend, as we see here, so you can see here I marked the prices. So here it's a drop of 600 pips. In almost couple of days, and then we are looking for a reversal because, as we know, nothing happens in a vertical way in trading. So here what we have is a bottom that is actually seen that we formed a bullish engulfing candlestick. What does this mean? You can see that we have two candlesticks. The green one, the bullish one, is actually the one that its body it's bigger than the previous bar or the previous candle, as it can be seen here. So it indicates a great buying interest that actually swallows the range of the prior candlestick, this one, and surpasses its body. There are two types of bullish engulfing strategy: more aggressive and more I would say normal way. This is more normal since we are only talking about a body that is bigger than the previous candle, while more aggressive one is, you will see for example here is that actually both a low is lower than the previous low, high is higher than the previous high, and actually body is bigger. So this is a really engulfing pattern or a candlestick, and it is much higher and much bigger than the previous candle. So let's get back to the previous chart. So this is the Canadian chart, and here, as we said, we have a drop of 600 pips. Then we are trading at the lows. As soon as we form this and close this candle, you can see that we have a great buying interest. And we close at the high, which immediately prompts the price to go higher because the bulls are taking short-term control and push the price higher. And you can see that here from the lows we have retraced around 50% or 300 pips in this particular example. So if you decided to buy the price at the close of this 4-hour candlestick at 120, 110, if you put your stop loss below the low of the engulfing candlestick, which will be around 120.50, so you risk 60 pips here, and then you can just look for another resistance or a big resistance that you can close your profit. The very obvious resistance here is, you can see these two lows here at around 123.50. And then if you just actually here, if you close your profit, then we are talking about 200 pips, more than 200 pips profit, of course, if you are patient. The second example I have here is also euro dollar. It's also bullish engulfing pattern, but as I said, right now we have a massive bullish engulfing candle that completely engulfs or swallows the previous candlestick here. And you can see here again we have a downtrend, so we create lower highs. You can see here lower highs, you can see here lower lows, and then we create a sort of a bottom here, then huge big candle which prompts the price to go higher, and immediately from here we have a 60 pips move. Of course this is 4-hour chart. If you just scalping, then this is an intraday trade that can give you 50-60 pips. If you're more patient, you can see then the price went 150 pips higher than the next day. The third example that we have here now is a bearish engulfing candlestick strategy, which is very similar to exactly the same as the bullish one. Just we are now obviously talking about bears that are taking control of the bulls, and here we have a big uptrend. We have a 200 pips move, 250 pips move from the lows, and then you can see here first we have indecision. This is a dodgy candle, and then you have a huge massive red bearish engulfing candle. You can see that we pushed 20 pips above the previous high. We closed at the bottom, and then the only way this is going to end is in a huge push to the downside. You can see that the next candle alone we are talking about 50 pips again on a 4-hour chart. So if you decided to enter the price here at 124.30, put your stop loss here above the previous high. That's 50 pips you're risking in order to get only if you just wanted to scalp, then we will talk about 50 pips. But again, if you're more patient, and then if you trail your stop losses, then we're talking about much bigger gains. As a summary, it's an extremely powerful candlestick pattern, and the greatest strength of this pattern is that you can actually see when the trend is reversing, and that you want to actually start thinking about, in this particular case, selling the euro dollar, because obviously this candlestick is a result of bears taking control over the bulls.